What is going on, everyone? Welcome to Trading Trends with John Salama, CMT. It is Monday, June 29, 2026. Let's get right into it. Hopefully everyone have a good weekend. Don't forget the market is closed on Friday for America's 250th birthday party. Market doing well today. We'll get through it together this morning, breaking down what happened, what is happening right now live. Also, next Amplified Alpha meeting in New York City. If you're a trader in New York City, come out. July 15th, we'll be at Connolly's in Midtown. It's going to be fun. And yeah, portfolio trimmed or got out of semiconductors this morning. Actually, one second. I missed. Yeah, semiconductors, that was this morning. So right now the portfolio is small caps and airlines. Airlines, honestly, doing all the heavy lifting for the portfolio right now. Small caps not doing a ton. All right, today they are gobbling up Mag 7, a huge day today for Mag 7. They are loving Amazon. They are loving Google, Meta to an extent, up a couple of percent. Consumer discretionary. So these names, as soon as you see these sectors moving, you think of the big caps, and that is an amalgamation, really a good summary of the morning, running 2+%. And what are they selling it? At the expense of what? It is at materials and nat gas, both falling about 3%, and new all-time highs for healthcare and biotech. We've been talking about biotech for at least a couple of weeks here, and now healthcare also hitting new all-time highs. So they're loving the absolute defensive and offensive part of healthcare, finding money today. All right, let us get through the tape here. Before we get through a couple things, some changes, I guess, in my forecast. I'm just going off the hip here. We had thought, we're gonna have a cute new all-time high going into America's birthday. I believe Thursday is a full day of trading. A little bit of a change of the forecast. You'll see what I mean in a sec. Q's a massive day. When you have the Mag 7 rushing higher, then you're going to have Q's propel higher too. That's up a big 2%. SPY up 1.5% to about 740 here. You're just about 20 points or inside of 3% of new all-time highs for SPY. Tesla, I'm telling you, they're loving mega caps today. Up a massive 6% is Tesla. Amazon up 3.5%. Microsoft not getting the love though, down 1.25%. AMD, they're giving it some 2%. Intel up 1%. Apple down 1% after a really bloody day last week when they were hiking prices 5% because of the semis squeeze and Apple being hurt directly on it. Google, massive day up 4%. SpaceX, they're liking that one though. It's down to $158, just $8 above the low on its IPO day just a couple of weeks ago, up 3% today. Marvell up 2%. And that is about, and the semi and Meta, there you go, up nearly 3%. All right, so intraday action, a little bit lighter volume than usual today, but that's unexpected for a summer Monday. Here was the opening bell, and it was that was pretty much put the high in, 739,990. We're trying to challenge that right here, right now. And then we went to a low at 10 o'clock. So kind of volatile right there. We went from a high of 740 to 732 within 30 minutes. And then really all along, I always keep my eye at VWAP right there at the time, 736.5. We get above there. I say, you're going to pick some momentum here. Notice we are also above 50 RSI, more buying strength and velocity than sellers. And then right here, this sliding 200 bar moving average, although this is fractally done on an intraday basis, each bar constituting 30 minutes. I see that's going to put some kind of a weight on the rally. And then here, coinciding with the peak earlier from the opening bell. And now here we are. I think today's not going to be off to the races for SPY, although it's going to have a great continuation of a day up 1.4%. Probably hit resistance around 740 half somewhere in the afternoon. More meaningfully, let's zoom out. So here's where we are here, kind of I would say almost like a sloppy looking W here. You had a lower low on June 26th, just three days ago, when you undercut 724. Don't forget, the all-time high for SPY was done now nearly 4 weeks ago. IWM just did it. Dow just did it. SPY's moment is now a couple of weeks ago old at 760, and then it did, I don't want to say plunged, but it did go to 720 thereafter. What I'm seeing here now, interesting candle today, up 1.5% for SPY. I think it's going to go, the other indices are going higher. I almost always look at the SPY here for this part of the show. I might have to pull. I get a clearer perspective. Dow has had a cleaner run, basically straight away higher, that began all these rallies, pretty much this leg of the rally all garnered strength right here after this higher close here on June 12th. And there's off to the races for all the indices with differing degrees. So SPY wavered and then went lower. Dow is looking absolutely doing exactly what it's supposed to. Let me pull up the Qs. Qs looks a little bit heavy due to the recent breakdown. And then IWM, I don't want to take the SPY off the screen just yet. IWM looks solid, doing exactly what it's supposed to. So in terms of cycles, I was looking for the market overall to take a rest on or around the 27th, which was just a couple of days ago, around the weekend. So with the indices looking to me getting not tired, but at least reaching their targets, and we'll have to get digestion, let alone, when you have too many hot dogs this upcoming weekend for America's 250th birthday, you're going to have, may have to take a pill. Trees don't run to the sky. So I don't expect the bottom to fall out, but I do expect it to be a little bit range bound is what that would tell me for SPY, because the markets, in terms of Dow and IWM, to me, have reached their short-term targets. So I will do it. What the hey? Here's the Dow in terms of the ETF. You'll see what I mean. So here's where the rally began and on and off. Here's the 12th. So we'll go to the 11th for this one. Typically around 15 days, 26. Look at that. It met its target on the 25th. I don't expect this to go to the sky. Anything above 515 will probably be bought, which is 1.5% away from here. So these are cleaner. Let me just pull up Qs real fast. And then, of course, we'll go in the hood, and then you'll really see what I mean. See, Qs is falling off here, although it didn't exhaust a lower low like SPY did just very recently. So you're having each index perform differently, and I'll put the exclamation point on it. Look at IWM, a beautiful shot. Look at the 11th, the same day that the Dow had trajectory. This one's continuing to do it, and that reaches its target on the 25th as well, same as the Dow. So again, I'm seeing these go at least sideways towards 292. So about a 3% sell-off tops in IWM over the next 2-3 weeks. I think these guys have reached its target. Overall upward momentum, but I will start to see downward, bearish distribution phase upcoming soon. But you can't have that happen when they're loving the Mag 7 right now. That's going to be, very, very buoyant, very good and healthy for the Mag 7. So, and for the indexes rather. So for overall, over the next 2 weeks, and going back to here, finally, button callback, get back to SPY here. So what are we seeing? It's a sloppy looking chart to me because of that W here in the lower low. Qs didn't have that here on this ugliness that you had on Friday. That ugly part of the sell-off got all the way to under 725. And view up was 727 that day. A floor upcoming for about 720, I would say. I don't love that candle, although I do love obviously that they bought it up. So right here, I'm saying over the next 2 weeks, if things get horrendous to the downside, I would say they visit this down to 720, which is 19 points away from here, basically 3% to the downside risk reward, giving away today's 1.5% rally and then some. And then I do expect us to hold, though, right around 740 where we are. So those are our levels here. And to the upside, I don't think we're going to challenge it over the next couple of weeks. So I'm not worried about 760 being taken out, to be honest with you, in the next couple of weeks. As we're just, I don't want to say struggling, but you just got to the 50 RXI neutral point here. So that is my view here, given all the markets I looked at in totality, and also VXX looks like it's due for a bounce off the bottom as well. And I put that all together in addition with a bond fixed income picture. And I do see S&P, like I said, so that's the risk reward there. Less upside in the short term. And don't forget, it looks pretty heavy here at 753 for sure there. And honestly, I think it's before that, 746 in the structure on out of steam. All right, let us get in under the hood because they are loving some areas today. Let's look at the mags. Folks love to poo-poo on the mags. I think I was watching CNBC for a little bit, and they were, absolutely saying the demise of the mags, it's over due to their, crazy spend as hyperscalers and everything else. And here's what I'll say. I don't care about narratives. All I know is that this group peaked May 14th, which is 6 weeks ago now, so quite a bit. And this fell into purgatory. June 9th, it dipped its feet in hell, and then honestly, it's been sleeping there since June 10th. It had a week's worth of closes above 1, 2, 3, and I couldn't even do 5. That's why I look for at least a week. Folks are really buying into it versus it just being a fad, like like what we used to see in IGV and software. So right here, this one had a hideous low on Friday, the same levels that it was first discovering, honestly, back last August for the MAG. So an ugly sell-off here. The 200-day moving average is going up at 1 penny a day. So the slowest velocity in quite a long time. It hasn't been above the 50 neutral RSI, my goodness, since June 4th. So almost a month now. These guys have totally been out of favor. Very important magnet, the 200-day moving average here. It's at 64, call it 90. You're $1.60 away. This group has been extremely beaten up. I think there's a flight to quality, although this group is expensive due to the, perceived and desired ROI that folks need, that folks are spending. So, in terms of Meta, they're laying off and freezing to make all that money back on Llama and all these other new investments with glasses, etc. In terms of the chart, 200-day moving average, I told you where it is, 64.90. The 21-day exponential moving average for this is 65.15. They're very close together. I do think this has a messy 2-week rise. This isn't done, obviously. Right here was up 90 bips today, getting further strength, up nearly 3%. This looks like to me it will get there, 64.90. If you're a believer in the story, you can add some. I mean, like I said, I'm not really chasing long positions here. I was happy to take some trims selectively. Again, 41 RSI here, so they're not exactly rushing, but I do like the candle formation off the bottom. Typically, what is that, a 3-month low here? So I would look at maybe, if you really need to, some some like October 70 calls if you really want to chase this upside as it gets to that 65 handle. Once it gets 65 handle, I would let loose, and there's likely going to be other trades. But I don't hate that. Otherwise, you could sell the July 60 puts. So see what that pays. Probably not a ton, but if you need some exposure that way. So that's the mags. They're loving it today, up nearly 3%. And why? We're going to go within the hood. I love this part of top-down analysis. Look at that, because communications are a part of it. Why have the mags been absolutely not been performing? Communications a big part of it. This group peaked. It's pretty wild back here in February. But back here when the Super Bowl was being played, yes, I put all calendar dates in terms of football. $120 was that high, and you always got to be careful when you can't quite get there the second time. It got to 119 here in mid-April, and then boom, very important. The 200-day moving average here. Look at how thin it danced with it, truly, from the end of April through the early June. That's why this is a recent development here. This just kind of happened 3-4 weeks ago, and that 200-day moving average figure, 115, really nice and easy. And boom, the first close below it was June 2nd, and it's been there ever since. And a 52-week low. I talked about this a week ago, a week and a half ago, maybe 2 weeks. We say you got to be careful. This looks like XLC is making a multi-month low. It could be making something like a 52-week low due to the extreme strength it's had since last summer. And boom, it's crazy because usually 52-week low is on the bottom caret, bottom part of your screen. This right here is in the middle part of my monitor. Everyone can see this. June 25th, that is Thursday. This hit a 52-week low of 105. Okay, so this is XLC. This is Meta, Google, I believe Netflix. So a lot of underperformance here. And this has not been under 50 RSI since the same day of the 200 moving average. So a major character change for communications June 2nd. Any way you dice it, I do expect, I don't want to say dead cat bounce because I love the high quality, mega cap area it's in, but it's obviously having a momentum breakdown. It's up 2% today. This looks like it will at least bounce towards 110. If you want a cheap kind of scoop up play, I would do kind of similar. I wouldn't say cheap, but I would do still give yourself room for all these kinds of moves. I would say October 118 calls, something like that. And always, like I say, sell something against it. So sell the July 118s against it so you pay for that trade. Otherwise, in terms of the puts, I don't think you're going to get paid for it, but you can sell the 105 July puts. Otherwise, it's a spicy trade. You can sell the 107 Julys and buy something against it, say the 106 put, something like that for July. But a couple trades here. And again, one other thing, XLC, not good. The 200-day moving average, when you spend this much time underneath it and you hit a 52-week low, pretty much the math is going to catch up to you. And the 200-day moving average is now going lower on this group. So a lot of algos can very easily scan this weakness. And that's not the bounce you want to get with a trailing, lower 200-day moving average. So not a great characteristic, and it pretty much happens when you have previous breakouts all the way from last September, and then you beat it by a hair in February, and then boom, an actual breakdown. So an ugly chart for XLC, Meta, Google, and the communication space picked very, very selectively because from the top down, they're not loving the area. And of course, this is a big representation of the S&P 500, so we have to pay attention to it. And again, 52-week low just 4 days ago for XLC. Absolutely wild to say. And uncharacteristically, 52-week low. It's not all the way down here on the floor, but still, you got to be aware. And the next one, XLY, consumer discretionary, a big day, up 2% at this writing, now up nearly 2.5%. Interesting chart. So this one peaked in January, just shortly after the year started. And then boom, its 52-week low was at the end of March. Of course, oil was raging. Folks aren't going to go to the mall, and they're not going to spend a ton of discretionary income on they have since they have to spend more on gasoline. They're not going to drive to the Gap, so on and so forth. And then a big rally here, of course, the week of the ceasefire, and you can see that structurally here when it breaks above its 200-day moving average on tax day here. An ugly rejection on April 17th, a little bit too excited there. It spends a couple more weeks trying to break out above that important 120 level, and it did it just here to 122, and now boom, it's broken again beneath that very important $118 line, which is 200 moving average, and also lower lows than this just recently. I don't like to see that. Just up to Friday, XLY getting dragged here all the way down to 113, and now being magnetized towards its 200-day moving average, which is 117.60. Today, it actually got to pretty much that figure, and then they shot a little bit lower. It is holding VWAP by about 50 cents. A nice day for XLY. Now what? Breathe, they say. Don't love this one. No trade for this here. This one looks heavy to me. The 200 moving average is going up by a penny a day. I expect that to stop each successive close that it has under 117.16. I don't love this one here. I may do a little bit more to get to 118, some of this action, and then start going lower. I think this will live at 115, 116 in the coming days, weeks. This looks essentially to me range bound between 118 and 111. Strangles also come to mind. Selling July strangles like that. Potentially a 112, 122. See what you get paid selling volatility as we go into the summer months on consumer discretionary. I know some folks have said, this might break out. This looks extremely heavy to me. Give yourself some room. That's what I think here. And again, 200 moving average has been contending with is 118 all year. All right. What are they selling? Let's keep going. So we're going all over the place here today with because we went through all four major indices here. Materials, we're getting some now nasty charts. They are selling this today hard. Materials down 2%. This group peaked back here mid-Feb at $54. Beautiful looking chart, though, better than the other two I just showed you. And a lot of folks probably would not say that. Would you rather materials or Meta, Google, or XLC or XLY? And look at this, a beautiful hold here as the war progressed, oversold on an RSI basis here, got all the way to 24, and yet a rising 200 moving average. What a stallion. It was at a 50 RSI just a few weeks later, and a beautiful looking chart, although today they're totally selling it. I don't love this one here for the next 2 weeks. Great looking chart. This looks like, to me, it looks a little bit heavy, and it wants to go to the downside. Ultimate floor of $49. I think these will hold. It had a beautiful job here in mid to late May, holding 49. Same lows it's been putting in since April, and it's above 200 moving average. I think it looks heavy here, and the upside has been done in the short term here, capped here at $53. It's tried many times. Look at these wicks here. It is just not ready, in my opinion. Maybe that'll come July, closer to August for materials. Great looking chart, though. They haven't thought about selling this, honestly, since Christmas, basically, since a couple of weeks before Christmas. Great looking chart. Materials. Trades that come to mind, I think it's going the downside, but you're not going to get paid handsomely doing options on this. You could buy the 49 July puts. I'm expecting, kind of a faster move going lower. But otherwise, I would stick with the variety of, a July or October 48 puts. But again, XLB options aren't going to pay you handsomely. Next, moving to the downside, what are they selling? Some natural gas, a big move lower, down 3%. Look at this. Tell me technicals don't matter. Look at this piece of what down here. This group peaked natural gas January 30th at 17 buckaroonies. That was the last time, go figure, that this was above its 200 moving average. So life comes at you fast. One time it's the best day you've had or the best you've been performing all year. And look at that. It did it by a penny from the previous high on in early December. It did it January 30th, and then boom, it's done that breakaway. It hasn't looked back since. And here we are, an ugly move. The 200 moving average serving its ultimate resistance here high is 1237. The recent low, the 52-week low was January 15th. The more recent low that I've been speaking of came at the end of April here, closer to $10. For the shorter term direction, of course, this is correlated to energy flows, everything that's going on with oil prices in the Strait of Hormuz and everything that's going on with the Iran, U.S., he said, she said. I don't love this chart here. I think it's going lower over the next 2 weeks down to about, I do, structurally the higher highs looks great. I think this is going to be range bound for a little bit between 1240, but say 12.5, give yourself a little bit of room, and by about 10.5. I don't think it's going to be putting in new 52-week lows, but I do think it'll be range bound there. So strangles come out to me. I don't want to chase it either which way. That wouldn't make sense to buy calls. You could buy puts because my more direct move is to the downside over the next 2 weeks. And that would be still, I would go towards an October, something like an October 10 put. This looks like it's going lower, like I said, to about 10.5 to $11 for natural gas in the next couple of weeks. Looks like the run lower started today. Don't forget, this thing on Friday was $12.10, and it's going lower. Looks like it's begun. All right, let's keep going. And then another move lower today. There's 3 big ones: materials, natural gas, and real estate. Real estate down 1.5%, a near peak here. This one peaked 2 weeks ago. Real estate 45.65. Beautiful looking chart. Nice breakaway here above 200 moving average in early April. Up the RSI today, 51. Great looking chart here. Let me see. I'll go a different time frame. This looks like it'll have a decent 2 weeks. I don't want to say it's going to blow the lid off to the top. I do have a 46 target for this, which would be new 52-week highs for real estate over the next 2 weeks. I do think they crowd into this a little bit. I like the strength of at least holding above the 50 neutrality as well of 50 RSI. Looks strong. Rising 100-day. Can't say that for a lot of the charts today. A lot of them have been messy. Mags, consumer discretionary, materials. Real estate looks strong here. Of course, rate expectation, rate cut narrative, potential wars, talking about price stability, but potential here on the dollar with 52-week highs, but possibly real estate also gets rates going lower. Always helps this group. Trades, I would do, again, don't call me crazy here, but like a 49 October call, and you could sell, something like the 47s of July against it. Otherwise, you can sell the 43 puts in July if those are listed. Look like decent trades. Always do something against it so you can sleep at night. All right. Let me get a drink of water here before we go into our next chart. We got a bunch. It's a short week this week. Number one mover of the past week, the best ETF in all the land. XBI, new 52-week highs. We've been talking about this space. Look at the stair step upstairs. This is just easy. We've been talking about it. And you can look at the video. I believe we can do it. It's June 17th here. We said when you have a breakaway from a former area combined with overbought, it's good. They're going to buy first and ask questions later. Guess what? You had a breakaway several days ago, to be frank, about 11 days ago, but now you're getting overbought, adding momentum here. That's how you get from 145 handle to 155 in just 2 days or 3 days here. So this group absolutely on fire. That's what I'm saying. You got to focus not only just on the macro, but individual spaces. We're just talking about real estate. Benefiting from potential rate cut, right? These guys also would benefit. They don't want high rates, so these guys would benefit. So it's helping this here. This has reached my target. Honestly, this has gotten a little bit crazy. I'm not chasing it here, but the RSI is confirming it to me. The only way I play things like this is with the beautiful breakout system. Look at all these green days, by the way. This reminds me of the semis run from a couple months ago. This has been all green since June 11th, just up every day for 2.5 weeks with one red day on the 16th, and it's continuing. I'll know this trend is getting tired when these start getting cut in half. So up 1% becomes 0.5%, becomes up a quarter, and then a reversal. But this looks like to me the stop is here. 430, so $8.60 is your thing, your stop. So it's trading 157 here. You can chase it right here, right now, 157. If it goes to 149, get out because it's likely mean reverting to the area of that former breakout, truly at 140, and it's still a stellar month for biotech. That's the way I would play that here on the system if you need to chase it here. Otherwise, I would wait for a mean reversion to about 140 to 144 and then get in. This thing has taken off flight. Speaking of taking off flight, doing all the heavy work for my portfolio right now are the airlines. Oil is in absolutely normal range here back in the 60s or 70s. Where is crude these days? $71 a barrel, and it's absolutely been benefiting the airlines. It's up, I believe I'm up 10% in the position here. A new 52-week high for this group on the 25th of June, 4 days ago. Delta's hitting new all-time highs. Airlines are doing great. It hasn't reached my objective. It is down 1% today. It's the second best group in the ETF space after Biotech. That's why we're talking about it. Reaching its peak on the 25th. Today, ugly reversal here. They want to shoot it to 33.30, and then boom, they shot it lower. VWAP is 33.06. It's not holding that. I think this doesn't have a superb 2 weeks. I think I'm going to be getting out likely soon-ish, or at least start to downsize the position. I'll see what my trailing stop is. I believe it is 30. I believe it was right around here, 32. I will check the sheet. Great. Look again here for the RSI, and then boom, a beautiful bounce above. So this thing's been all the rage since May 20th, and I do that with a break above its 200-day moving average plus the 50 RSI. So I'm spending a lot of knowledge and facts here, facts only. But I do think this one's going to digest its gains over the next 2 weeks, and I think it's absolutely normal for this to go down to 30. So that will absolutely take me out. And I think truly about 30 to 30.5 is my area for where this goes, and that's going to be a normal-ish spot for it to breathe. It's had a stellar week, up 7% in the past 5 days, 1% and change a day. Looks like it is potentially reversing right here, right now. All right, the number 3 on the upside, they're loving healthcare. So Biotech for you, absolutely risk on, folks. Best ETF in all the world, up 7.5% in the past week. Number 2, the airlines up 7. Your boys in that one. Number 3, healthcare. These are the big ones. Lilly, Johnson & Johnson, etc. Up 6.5, call almost 7% now. Today it is a bit of a reversal here. So it's a new all-time high. Interesting looking candle because it is now down 20 cents. They shot it to 161 even. That's your all-time high. VWAP on the day is 160.34. They send it below that as well. So a bit of a reversal. You got to always be aware of these things. To me, this a little bit of an interesting looking chart. You see it tangoing with its 200 moving average truly since mid to late March, all the way through mid-June. So 3 months of this, there's almost this coiled energy with an upside, but absolutely with a floor of 142 holding. And then you want to test the bridge higher, break above 150. It does it, only to test it later at the same level of 200 moving average. And now, boom, new all-time highs. I forgot the important level that it's had here many times at 160. So now what? Oof. And you had a reversal intraday. So easy one this is. And you scratched RSI of 70. I wouldn't chase this one. This is interesting. I'm glad we went through the biotech and more specific areas. Only way I do all-time high and breakaways like this is through the stop system. I don't, I wouldn't chase this one personally right here. It's had some huge candles. Don't forget this was up 3% on Friday, and now you're having this happen today. I would only do it through the ATR system. So it's $255. Double it is $5. You can buy it right here, right now, 160. If it goes to 155, get out because it's very likely selling off to about 152. All right, and that's the only way I would do that. I would stay away personally from options in this one, unless you really needed to sell the 150 puts in a page or something. But I don't think it's going to. All right, and now let's look at the biggest losers of the last week. Am I in any of these? No, but I was in a correlated trade. Number 1, a loser, the worst ETF. It cuts both ways. Anyang is hello in Korean. I should learn how to say goodbye because it was goodbye to South Korea last week. The gens flew too close to the sun and hit all-time highs on the 18th of $213. In the last 5 days, it's down 11% or nearly 2% and change a day. Today, down 1%. Seems similar. Great looking chart. Look at this. Not one touch of a rising 200 moving average. Absolutely stellar, but trees don't grow to the sky here. Sort of a similar looking W like SPY, but this one didn't give out new lower lows. So it's different in terms of momentum and velocity to the upside. I do see this one going southward as I see S&P not going higher for the next 2 weeks. Similar beta rush here in the AI memory of South Korea, Samsung, Hynix, 40% of this basket. I see this one going sideways to south for the next 2 weeks, holding around 198, which is a 21-day exponential moving average, and a floor of potentially 175. Still respecting essentially these lows that's been putting in since the end of May. In terms of trades, I think you can sell the 210 calls in July. Always buy something against it, like I said, for July. So buy like the 215s or something. Otherwise, because I don't believe in selling the story, you could do something nonsensical like buy October 175 puts. But the minute you're up and it gets to that strike, get out of it because I do believe in the South Korea story, and this is not over. In terms of getting in, like I said, I would wait for these 2 weeks to finish, and then I would get involved and start buying probably in South Korea again. One second, my screen is freezing on a different one. Let me just see something here. For high, yeah, I mean, again, yeah, mid-July, this one would look right, but I would love an entry personally around 195. All right, South Korea. Next, ugly silver. I was seeing several posts on silver. Now's the time, silver, wake up. What was that song from Stranger Things from years ago? Chrissy, wake up. Chrissy, wake up. Silver, wake up. Really silver in hell here since June 8th. Visiting its 200 moving average. You start doing this enough. Look at this. Oversold last week. 200 moving average is rising just due to the crazy run it's had. Look at this. When you go from 32 to 110, you're going to get a rising RSI for quite some time. I still don't like silver here. You want to buy into confidence with this. I want to make sure that the trend is back. So when they test things, XLC has, for example, went to 52-week lows. You don't want to predict those types of things. You want to ride it where the wave is. I would much rather get 3, honestly, or 5 closes above $62.25, which is a 200-day moving average, to have confirming strength in this. That will correspond more than likely with the 50 RSI. I will see then where the buyers are putting up or shutting up, or the seller saying this is exactly where I was saving for my dry powder, and the story is done. I still believe in it. A beautiful year for silver, but yes, it's had a horrendous 3 weeks. More than that, I will say, obviously, the thing peaked at the end of January. Don't call me crazy. You can call me crazy, but I still believe in the story. It looks extremely heavy. I don't like the ceilings it's had at 85, at 78, at 62. If Bitcoin is digital gold, then this true version of silver is almost just as bad, but not quite. Silver, I don't like it. Like I said, I would buy into strength here. I don't want to chase it here. I'm seeing a couple, if you're really gutsy systems, if you get like close above $55, but I don't like that. That's for you speculators. I'm not going to do that. I don't want to short it either because I'm a believer overall, but that's it there. Down 11% over the past 5 days, or 2%-ish a day. Today, down 1.3. And the last one for the weekly recap, Ethereum down 9% over the past 5 days, inside of 1% a day. Today, up 3%, trying to reverse that. This hit 52-week lows on Ethereum, which was a big chatter of conversation for the meetup because there are a bunch of crypto folks there, which I appreciated. On Friday, 52-week lows for the Ethereum ETF. Okay, hit 1153. We've been talking about that handle. Horrendous here. If you're a programmer, algo, there's no reason for you to even be interested in algo in Ethereum since mid-January. That's just quantitatively speaking through if-then statements. There's no reason to own this thing. Hence, of course, the bottom 2 days ago. Now you're having a 3% bump. I know I just lost a lot of subscribers based on what I said about Ethereum. So sorry. That being said, it's probably going to get worse. I don't like this one for the next week and a half or so. I think this is week WEAK for the next WEEK. Towards another 11 handle. Any dead cat bounce would get you to about $13 and a quarter. So another $1 from here. I almost think honestly it's going to die there. If you get paid in selling strangles on ETHA, I would sell the 13 quarters. Good price discovery there, and resistance to me now. Sell the 13 quarters, and then I do think it's headed towards 11 half. So I also want to buy those puts. A couple different things you could do. Overall, I think the momentum is lower for Ethereum. This thing can't even have 3 green days in a row. Last time it's had 3 green days in a row was Cinco de Mayo. It's trying to put 2 days in a row now. It's just I think this is going lower. Ethereum down 9% over the past 5 days. Top 3 trades of the past 5 days. If you've been short South Korea, if you've been short silver and short Ethereum, those are the 3 best trades in the entire marketplace. So Samsung, Hynix, silver miners, Ethereum, Bitcoin, Solana to an extent. So all those are correlated. Obviously, those are the best trades of the entire past 5 days. Congrats if you're in them. Now, congrats if you're in these top 3 trades of the past 52 weeks. Some folks we are bringing back right here. I love this part of the show. It's a short week. We didn't get to do this last time, so we're doing it right here. Number one trade in the entire world over the past 52 weeks. You guessed it. It was just the best short of the past week, and that's why time frames are so important, so dang important. Number one trade in the whole world. South Korea up 175% year over year, peaking just 11 short days ago. I can't wait to say Anyang to you again. I already gave my forecast on this, so I'm not going to go through it. Up 175%. That is absolutely bonkers. It's the best in all the land, not anything else. We'll get to number two. Semiconductors. This is SOXX. This is the field over SMH, which is more NVIDIA weighted. I've been talking about that. I like the field over straight up NVIDIA, although I believe all of it will make you fat and happy and giddy. Although when you look over year look back, which I do, SOX up 155. So you were better off playing South Korea straight, but you only got those couple of names, right? Number two, to fill out the alpha basket here for the past year, is SOX up 155. This is not a chart we looked at today. I sold out of it this morning on the sell-off until I get back in at some other future time, of course. I think this one also goes southward for the next 2 weeks. This candle today is giving me pause because take a look at it. It shot all the way lower to 572 today, and the high 613 VWAP is all the way back there at 599, and they've been loving that, and it's all the way here to 612. So an amazingly ridiculous day, honestly, for the SOX up 4%. This was an ugly day for SOX earlier this morning. If you guys were watching closely, it was an ugly day. And above, look at this, 50 RSI since the week before the ceasefire. Not one close below the 200-day moving average all year. SOX, a beautiful looking chart. I do believe it goes south or at least sideways for the next 2 weeks with a ceiling on of about 620, kind of selling strangles. I don't want to do it possibly on SOX because it's such a powerhouse, but I think you could probably sell something like the 625s, maybe skew it a little bit, and down to like the 585s, 590 to the downside strike. Because when they sell this group, they really do sell it. Friday, they were tempting with it. Remember, it's down an ugly 6% on Friday. Number two trade in the whole world, up 155%. I think this goes lower for the next 2 weeks to about 590, 595 trades. If you want to explore just that, the puts are cheaper today. I would do like the October, it's going to be expensive. October 590 puts, it's going to be expensive. You could do August or July, but understand this has another green day and you're going to get wiped out on it because that's the way front-dated options move. You can do a spread against it, but have your risk management in place. Amazing looking hammer today here. They really stepped up. That's massive. Just to put a point on this, look at the intraday chart here. So this is 9:30 a.m. They plunged it after, okay, we opened at, call it $592. They shot it all the way down to 572 and it said, no thanks. But right back to 588 at 10:30 a.m. and we're all the way here to 612, running into shorter term momentum resistance at 619. So always look at charts inside charts. But I do think this one has a down 2 weeks for the SOX, and I would love to get back in at 590. And then number three, this isn't just the trade of the day or the week now. XBI is the third best trade of the entire year. Okay, look at this chart now. This has been absolutely amazingly constructive since this breakout, especially above $92 here at the end of last summer. Not one close above a rising 200-day moving average. New 52-week highs today, XBI. The alpha difference, the performance is absolutely astonishing. South Korea up 175% year over year. SOX 155. You're looking at triple digits for both. XBI only 90. So I say that in terms of there's a catch-up trade. I don't talk down to chasing it right here. Again, the technicals for it. Look at these all green days here. It's been up every single day since June 11th. Can trees truly grow to the sky? No. This reminds me of the semis. Could have another week or so to go, though. The way you are going to play this, if you want to, is, like I said, to close up the show now, is $8. So you can get it right here at 157. If it gets to 149, get out. Because probably going, like I said, to 140, save yourself that difference. Otherwise, enjoy the ride to 160, 160 plus. Also, just in terms of the day health, and I'll close with this. Here's a 30-minute chart. Yeah, this thing's crushing it. This thing peaked at 9:30 a.m. actually on the opening bell. Still holding view up though. XBI, number 3 chart of the year. Thank you very much. That was a lot. We will be back for one other video to close out the week, either on Wednesday or Thursday. Peace. Rocco says bye.